Welcome to the Prudent Pulse. We're covering what to look for the week of July 18th to the 22nd. Now, following last week's CPI report, which came in high at 9.1% for June, Fed fund futures initially traded down to imply an 80% chance of a 1% rate hike next week, but they've since settled back to 30%. Now, at this point, the market is pricing in a 2/3 chance of a 75 basis point rate hike instead. The Fed is going to need to balance between not being overly aggressive when oil and commodity prices are already falling, but still being strong enough to maintain credibility on fighting inflation. I do think a 75 basis point rate hike is likely as well. It's still a historically significant increase, but it does leave them flexibility to assess the upcoming data before the next September meeting. Now, on the earnings side, we're about 10% of the way through Q2's reporting season. So far, about 60% of the companies have reported earnings beats, which is actually below the 5-year average of 77%. But given the extreme negativity already built into the market, that has been good enough to send stocks higher so far this week. And that's this week's Prudent Pulse.